Hey guys, today we are going to talk about gift funds. What are they? How can you use them for buying a home? And the big question that I always get asked, are they taxed? So I actually brought on Matt Evers, my personal CPA and CPA extraordinaire. He is an expert in his field, and I am excited to have a conversation with him about gift funds and taxes. So Thank you so much for coming on today.
Hey, happy to be here.
Yeah. So I want you to tell us a little bit about yourself and what you do and what you specialize in.
Perfect. Yeah. So I run a little firm called Evers CPA, using my last name. Very creative.
Love it.
We specialize in providing accounting services for custom home builders.
Okay.
And other than that, hang out with my family, which my wife. She's a realtor.
Love her.
And our two kids. And if we're lucky, we're spending time on the lake in some type of vehicle.
Very good. I love that you are not only working with home builders, but you also have, a wife in the real estate market. So you know the plight that everybody has right now. You've heard what's happening in the market.
Mm-hmm.
Everybody's trying to figure out how to get into a home and how they can utilize cash as much as possible to get there.
Right. Yes.
So let's talk about gift funds, because I know for the lending world and the CPA world, sometimes we use different language. Mm-hmm. And I want to kind of break that down and make sure we explain what we mean by when we say gift funds,
Mm-hmm. Okay.
right? So why don't you tell us in the CPA world, what do gift funds mean to you?
A gift is something that I'm going to give to the recipient with no future agreement to anything that I will receive in return.
Perfect. So that sounds a lot like what we think is gift funds. In our industry, we have all of these regulations on what we can and can't use for money, for down payment, for earnest money, for appraisal. And what gift funds are from the lending standpoint is it's any funds given outside of our own personal funds to be used for the purchase of a home.
Okay.
Now, the nice thing is that there's no amount of money that we limit for gift funds. So if you need $100,000 for gift funds, we're okay with that. If you need money for down payment and closing costs, great. If someone just wants to help with earnest money, they can. So whether it's $5 or $500,000, we don't care how much is used. We just care who it came from and how it was sent.
Okay.
So there's some rules around that we're not going to get into today, but those are some of the things that we look at. So here's my dilemma. And this is one of the reasons I brought you on. Every time that I have someone coming in and they have gift funds available, they tell me that their CPA says that they can only use a certain amount of money. So I'm going to give you an example. I have a client that is a couple. They've got 2.5 kids. They have a dog. They're outgrowing their house and they're moving up.
Sounds familiar.
So they both work from home. They're tired of staring at each other at the coffee table and they need more space. They have enough money for a partial down payment, but mom and dad have decided they want to gift $50,000 on this $500,000 purchase price. And they go to their CPA and their CPA says, you can't do $50,000. That's too much. So can you explain to me why CPAs say that there's a certain amount of money that they can gift and what that number is?
Sure. So what we're talking about here is there's an annual exclusion amount of a gift that I can give to an individual during a tax year. Okay. So for 2022, that number is $16,000. Okay. So if I give an individual $16,000, that's excluded from any sort of information reporting purposes or any taxation. So if I exceed that amount of gift to that individual, then I'll need to fill out that Form 709 and report that to the IRS, but I'm still not paying taxes on that amount.
So, wait. I want to back up.
A little mic drop.
I know. So, okay, I want to break this down just a minute. First of all, 16,000 is this year's number because it's been 14 in the past,
right.
It's been 12 in the past. I've been doing this long enough. I'm like, the number keeps changing. So it is an annual number. Mm-hmm. Does it change every year?
It has, well, no, it doesn't change every year, but it was 15 last year. It's 16 this year. Okay. Who knows what it's going to be next year?
Okay. So that was the first thing you said. The second thing you said was, as long as they're giving that amount or less, they don't have to report it at all.
That's correct. Cumulative for the full year.
For the full year. Okay. So the third thing you said, and this is key because I really want to dive into this for a minute. You said if it's over the 16,000, that they fill out a form, but they don't pay taxes on it. Mm-hmm. Can you elaborate on that?
Yeah, sure. So think of it in this way. There's an annual bucket and then there's a lifetime bucket. Now that lifetime bucket is for your gifts and your estate purposes.
Okay.
So the annual exclusion, that bucket is 16 grand again for 2022, but you have a lifetime bucket. So when you exceed that 16K, you're going to fill out that informational return. You're going to work with your CPA advisor on that so that you fill that out accurately.
Okay.
And then you're basically telling the IRS, I gifted X amount, which needs to go into that lifetime bucket. Now that lifetime amount is $12,060,000 for 2022.
So 16,000 for annual, but 12.06
million.
million for the lifetime.
Correct. For it given to anyone.
Anybody,
so you're
any
16 grand,
estate.
16 grand. Yeah.
Okay. So that means that if mom and dad from the scenario we were talking about earlier is actually going to gift 50,000. So this year, if they're over the 32, then they just fill out the form and then that number goes toward their total lifetime.
That's correct.
But they're not being taxed on the 50,000.
That's correct. They are not being taxed on that. So let's play that out for a second.
Yeah, please.
So let's get creative with it. So, well, wait a second. Well, what if mom gives son and daughter-in-law each 16 grand? So mom gives 32, and then dad gives son 16 and daughter-in-law 16 for 32. So they combined gave 64. Is that possible? Because then that's
That's better than the 50,000.
That's quite a bit, or even 32,
Yeah.
correct.
Yeah.
So yes, that's a possibility, but you really want to work with your advisor and plan around that because you're talking about gift splitting rules,
Okay.
and you want to work with your CPA to make sure that that 709 is filled out accurately.
Gotcha. Still though, and I keep going back to this
Not
because
taxed.
not taxed,
Yeah.
you're just filling out the form.
Informational purposes
Okay.
only.
So then I'm super fascinated by this because this has been honestly sometimes a deal killer for certain families. There are couples that have not been able to maybe move forward because mom and dad wanted to help, but they just didn't have that extra money available. So why do you think that so many people are told a set number and then don't ever know any different?
Yeah, that's a good question. I imagine that, so they may have Googled it or looked up online and saw that 16 grand number or 15 last year, et cetera, and maybe didn't read further down because it gets a little bit more muddy and confusing.
Okay.
They
Yeah.
might have thought, oh, 16 is the number. If I exceed that, I'll probably have to pay taxes. So it might be a little bit more wrought with assumption. And
Gotcha.
let's be real, the tax code is complex and no one wants to get anywhere near it. So
No.
yeah, you might have just seen that 16 number and said, oh, if I go over that, then I'm gonna have to pay tax on it.
Yeah. Well, and I love that you're diving into this because I really, again, I will never give tax advice and I'll tell people to go check with their CPA, but I can at least say, listen, go ask them about the annual exclusion versus the lifetime exclusion. Is that what it's called?
So yeah, the unified credit.
Right, yes.
Yeah.
So that they can dig into that a little bit deeper so that they don't miss out on the house of their
That's
dreams.
right, exactly.
So, okay, so I've got a couple of follow-up questions from this because everybody, they dig into these things and they have other questions that come up.
Yeah.
So let's say the recipient receives these gift funds. The other question I get asked is, does the son and daughter-in-law that we've been using, the recipient, do they pay taxes on the gift funds?
Great. So this is an easy one. No.
Okay. Perfect. No. So no, anything that they receive that year, they're not having to report that as income coming
exactly.
in.
No.
I get asked that question a lot.
That's
so,
a good question.
if they sell the house, I know there's a lot of nuances around selling the house and what they would pay taxes on money they've made from the house. But in terms of the gift funds, do they ever have to pay taxes on those gift funds once they sell the house?
No, but yeah, like you said, you now have this money, this property, this cash that you've received from your parents is now yours. So if that's contributed to a piece of property that you're purchasing, then if you have any sort of gain on that property, you're going to pay tax on that property, not anything related to the gift, if that makes sense.
It does.
Okay.
It does. So we've talked about having to pay taxes. Let's talk about tax credits or
yes.
tax deductions, because that's the next thing. When we talk about wealth building through real estate, I talk to all of my clients about all the benefits that they get in owning a home and some of the tax deductions. And I always get asked this, especially at tax time, hey, do I get to use that gift, whether it's the donor or the recipient, do they get to deduct that or use that as any sort of credit for their taxes?
Right, that's a great question. So if I'm going to give this gift, why don't I go ahead and get some sort of benefit myself
Right,
for it as well,
right.
other than seeing my children benefit from that?
Yes.
But no, there's not. So unless you're giving to a charitable organization,
Okay.
501c3 or otherwise,
Right.
that's identified by the IRS as a charitable organization, then no, it wouldn't be a tax deduction.
So Matt, we've talked about giving funds from like a parent to a child.
Right.
Is there any differences or any nuances when it comes to maybe a grandparent or a great grandparent giving
Oh,
funds? Because we see that a lot too.
Yes, very good question. So when we get into generation skipping, so
Okay.
there's a tax called generation skipping transfer tax. So 2 generations or more, there's an additional tax. You're going to want to plan around that with your CPA advisor as well.
Okay.
And so,
Go ahead.
oh, sorry,
No.
yeah. The annual exclusion amount still applies to the GST tax.
Okay.
So you can still give to your grandchildren or great grandchildren 16, but when you start going above that amount per individual, you really want to start planning around that generation skipping transfer tax.
Okay, perfect. And that's actually, I was going to say before I almost interrupted you, is I wondered if it was a different amount since it is a different type. And you know, for us, there are people who are excluded from gifting as well. So it does have to be a personal family member or a personal family friend, depending on the loan. So there are some people who can't gift and can gift, but as long as it's a family member, they're able to do that. So it's good for me to know, you know, if it's a grandparent or great grandparent, to advise them to talk to someone else.
Gotcha.
Are there any, say it is a close personal friend, is there any differences with that?
That's really cool. That's a
Yeah.
great question. So no, in the eyes of the IRS, the gift doesn't have to be a relative. It can
Okay.
be any individual.
Okay.
Related, friend, otherwise. As
And
long
as
as
long as
there's
they-
no strings attached.
Okay.
Yeah, as long as there's not some other future agreement or responsibility of the recipient, then you can give to that person.
And it just still applies. If it's a family friend and they gift, they still have to fill out the tax form and
That's
everything
right.
else, but it's nothing different.
That's right. Exactly.
Okay, great. I have absolutely loved having you on here. You have expanded my mind and it helped me understand some things. I've learned some new acronyms and that whole 12 million, tell me the number in 12 million.
12,060,000 for 2022,
Okay.
your lifetime exclusion, otherwise known as the unified credit.
Okay, so my goal is to be able to give over 12 million.
So that you can pay tax?
Right. I mean, wouldn't that be awesome? No. But I really do appreciate you coming on here.
Of course.
You know, as my husband and I are planning for our daughter's future and we're looking at things and where we want to set aside money, it's always helpful to know. But as you and I both know, everybody needs all their tools in their tool belt. And if we
Yes.
have parents and grandparents and family members wanting to help with the home buying process, I don't want them to be limited by misinformation. So I just really appreciate your expertise and your time today. And I want to, you know, my goal is to help people build wealth through real estate. And so when we talk about gift funds today, I hope someone out there has better information and is able to achieve that sooner because they know something. And we debunked some myths today, because I was always told it's one number and it's not. So hopefully you guys have learned something new. And Matt, I just thank you again for coming.
Yes, of course. And yes, before you find that dream property, talk to your expert lender before you fall in love with that house, because you got to get creative out there right now.
You really do. And so we are here to bring experts on to help people get into home ownership quicker. And so we just thank you so much for coming.
Of course.